Adverse credit. What is it? Firstly, you do not need a perfect credit score to get a mortgage. However, it is true that if your credit history maybe isn't the best, then your options may be a bit more limited. Although an application may be declined by a high street bank, Hello Mortgage have access to a large panel of specialist lenders who take a slightly more flexible approach to their lending. This can be more suitable to people who have maybe faced certain life events such as divorce or illness, and it's left a mark on their credit history. Typically, lenders will rank adverse credit showing on your credit report in the following order, from the least to the most serious. Late payments. The odd late payment on your credit profile isn't unusual, and by itself it shouldn't be enough to stop you securing a mortgage. However, it's possible that it could still impact your ability to access some of the cheapest products on the market. Most lenders will accept applications from those with a few missed payments as long as there is enough positive information to make up for it. Arrears. This happens when missed payments run 2 or 3 months consecutively and start to become a little bit more frequent. This may be seen as the first sign of financial distress and could deter some lenders. To put it simply, the further an account goes into arrears, the more of an impact it will have on your credit profile. Arrangements to pay. Although these are often well intended, they can have an impact on your ability to get a mortgage. This is especially the case when the arrangements to pay are against a current or a previous mortgage. Defaults. So defaults effectively display that you were unable to manage your accounts effectively to the point where your relationship with a lender has collapsed. A CCJ, that stands for County Court Judgment. So a CCJ will begin to now more heavily impact your choice of lenders. This shows that a lender has actually had to take court action to retrieve the debt that was owed, even after a default notice was issued. IVAs, other insolvencies, and bankruptcy. There are few lenders who would consider offering a mortgage to somebody who is in an active IVA. As well as this, any bankruptcy would need to be discharged before lending was legally viable. However, if multiple years have passed since you've been discharged from the IVA, then lenders will consider lending to you for a mortgage. There are, however, other factors that will impact your ability to get a mortgage in relation to the different types of adverse credit that I've mentioned, the dates that the events occurred, and also that the issues were satisfied, and as well the amount of money that is involved. It's very important to note that each lender has their own lending criteria when it comes to a person's credit profile. Just because your credit history doesn't meet the criteria of one lender definitely doesn't mean that it won't meet the criteria of numerous others. Therefore, it's worth speaking to an advisor who will be able to have a look through your credit report and your circumstances and identify the lender that's more suitable for yourself.